If I saw that, I traded that. And then it doesn't work out. And you're like, wow, like that's exactly the setup. Why didn't it work out? And then you've got to like place it, and I just remember looking at the charts being like, okay, that's 750,000 Rand. Okay, that's R1 million. And it was just devastating, My story kept changing as the market session evolved. And before you know it, you've taken like 3 or 4 losses and made all these decisions. So it's far easier to make fewer decisions and let it go for a long time.
Hello and welcome back to another Alpha Capital Group Traders interview where you are joined by me, William, in the Alpha Capital Group headquarters here in Newcastle. Today I am joined by a 5-figure funder trader who's received thousands of dollars in payouts. So let's get right into it. Who are you and where are you from?
Yeah, so my name's David. I'm from South Africa and been trading now since mid-2022. And then started off with algorithmic trading and now then moved over to discretionary trading early in 2023.
How was that change swapping from one trading style to another trading style?
Big change on the psychology side of things. So having the discretion to make decisions by yourself and that really got the emotions going. And I'd say that was the big change. But one of the cons on the pros and cons list.
Amazing. Okay, so tell us a little bit about that then. What kind of funds were you trading before?
Yeah, so I got funded actually right off the bat with an algo with my Forex funds, and then actually got a good payout there. And then, I didn't get a payout with the algo. The algo crashed as soon as it went live. So that left me with a bit of a problem because I got funded and then it didn't work out. And I was like, I want to be in control. I want to have the control and know what's going on. And I feel like I wanted to develop the skill as a trader. I wanted to be able to interpret what the markets are doing and then make a decision. And until I could do that, I wasn't really, what was I doing in the markets? So that was my philosophy. Yeah.
I suppose when you had that algorithmic trading bot, when you was using that, it was quite disheartening because I believe passing those 2 phases to then finally getting funded, you're assuming you're going to make a lot of money from this bot. So how did it feel when it didn't work anymore?
Yeah, just empty, just no, it wasn't in my control. I lowered the risk, when I had 5% drawdown left, still, got down to 0. And just being like, this is not what I want out of trading. This is not the idea that I had when I started trading.
Yeah.
So I wanted to develop the skill. That was what I wanted to do. And then my journey began with discretionary trading. And
amazing, brilliant. So even though that was a really tough time in your trading career, if anything, it's probably one of the most positive things that's come out of it because now you're actually learning the markets for yourself.
Yeah, and now I can look at the markets. Look, it doesn't always make sense to me, but I can see patterns at certain times of the day, and then you've got a feeling like, okay, this is a good pattern. This should work out, and if it doesn't, you're actually left with a sense of you're a bit surprised and you're a bit disappointed that didn't work out because you've seen this happen so much times. Yeah.
So David, I want to know more about your actual trading account with Alpha Capital Group. So how much are you funded with us?
I'm funded with 50,000. I've been funded with Alpha Capital before. I've gotten 2 payouts so far, and
amazing.
Hoping to get my 3rd one soon.
We're waiting for it. We're expecting it, and we can't wait to see it. So, if you wouldn't mind telling everyone watching this video, how much have you actually received from Alpha Capital Group overall?
Yeah, about $7,000 so far.
$7,000. And how did that feel when you received that $7,000?
Yeah, good. It's actually difficult because earning that much money and, sitting at your computer or, just clicking a button and then earning that much money, it plays a lot of tricks on your mind. So it was nice, but it's not easy to earn money as well.
Would you say receiving a payout can ever have any negative impact on a trader's psychology?
Definitely. It can make you more prone to taking on risk. More greedy, more, just more averse to risk. You can just think, oh, this is easy, I've got this, and start trading bigger size. And it's definitely, receiving a payout doesn't make it any easier.
Absolutely. No, I agree with you on that. It's very important that a trader needs to stay grounded, even when they've received thousands of £1,000s worth of payout. I agree with that. Absolutely. So moving forward then, what assets do you actually trade, David?
Yeah, so I'd say 95% of the time I'm trading gold, and then I dabble in a bit of pound yen. But mainly gold is what I'll trade.
So I see you trading a commodity and also an FX pair. How do you find this works? Do you use the same strategy for both?
I look at the same patterns, I'd say, on both. It all stems from the mentor that I had originally, because you did those two, so that's how I got into it. But it is nice to be able to look at another asset or another instrument when like the gold market's just dead or like not making any sense or there's low volatility. It is nice to be able to go to another instrument and not feel totally at a loss. Yeah. So it does come in handy in that aspect. But at the moment, gold's keeping me busy and, demanding a lot of attention. So there's been no need to basically go to pound yen.
A lot of traders will disagree with trading multiple pairs and say focus on one pair and learn it like the back of your hand. Now, would you disagree with this and say it's important to actually diversify your assets and have multiple options in case, like you said, one goes dead?
Yeah, I think it does help. It's difficult for me. I've had multiple trades on at the same time and I don't like it. I don't like having two different instruments going at the same time. I find it very difficult to keep track of both, even if you're looking at them at the same time. But what happens is that the same patterns will show themselves in these different instruments. So you can look at these different instruments and you'll see these same patterns, and a certain pattern might have a high prevalence and a high success rate in pound yen, for interest sake. But it can also, it'll disregard it and have like a huge retracement or a huge move up, and then you've just got it'll be off the higher time frame that it'll be targeting a level. So don't disregard the patterns that you see that are working on your instrument. There's a high chance that they're working on other asset classes as well. You just got to look around. If it doesn't work on one asset class, that's fine. Look at another one. If you see it's working, just keep track of it. Just look at that instrument over time and see, okay, this pattern does occur fairly regularly. It does work out when it does happen. And then one day put on a trade when you see that develop and see what happens. Hopefully it's a winner, but these patterns I think are pretty universal. They do apply to a lot of different instruments.
Can you now walk me through your strategy and guide me through the key principles that help you go through your trading day to day?
Sure. So can I share my screen?
Absolutely, yeah.
Yeah. Screen, window. Okay, so what trading view open up here? Can you see it?
I can see it, mate.
Okay, so this is gold. Everybody and their dog's been buying gold lately. So we're trending. So that's basically what's happening. I'll go back in time quite a bit. So we're obviously in a range around here, 2020 into 2023, and then we broke out of this range. This sequence over here, this is this is a pattern, So we've got a range, and here's your resistance, and over here, and we broke out of that resistance. We came back in, and then we formed support. So this is on a monthly, so it's pretty significant. And then boom, out of this monthly we come, and then it just goes like crazy momentum. So gold's in play. At the moment it's in play, and it was in play for last year, definitely. And then we had a retracement. So US elections, and we have a retracement. And then so we come down again. It doesn't break below that body. So a lot of what I do is reading the candles and just looking at the candle formation, through the life cycle of the candle. So we come back down here. So good retracement. So if you're a buyer, if you're a long-term buyer with a long-term time horizon, you've been waiting for this moment. And then we close back above that body. So again, if you're wanting to short gold for the long term, you would probably wait for a better pattern or better sequence. And then this candle over here. So huge retracement just to go down like this little bit over here. It doesn't even break the wick at the bottom. And then here we go again. So, I don't trade off the monthly, but this gives you a very long-term good idea that'll have all the fundamentals and everything baked into it. So that's a good one.
So just out of curiosity, gold's clearly in a super bullish trend right now. Where do you see it topping out?
We've got to get to 3,000, surely. That's just the logical...
I've heard that number a lot. I've heard 3,000 a lot.
Yeah. It has to. Obviously, there'll be retracements and funny business along the way, but it's just so close there. I'm sure a lot of people want to see it. So I think, yeah.
It's got to hit that, surely, yeah. I agree with that.
So then, okay, obviously we're not on monthly, we're on weekly. So yeah, weekly, super bullish. And then again, it's the same pattern on the monthly, just on the weekly now. So it comes down, it doesn't break the lows, that's fine. It creates this little... bearish candle over here. So, if you want to go short for the long term again, it's you're a bit nervous. For interest sake, a break of this high over here without breaking the low, for me would be a entry that I would take with a stop loss below that low of that candle. But you've just got this weekly little wick here that you got to worry about. But anyway, so it comes down and it closes bullish again. So again, if you're trading off the weekly, you would enter over here, stop loss below there. But anyway, it's still going up. Bad close, so a huge rejection over here on that weekly. And then the election with Trump. So, this was crazy volume. It was, out of this world over there. I missed out big time during that election, just closing early. But I was in a good style, at a good position, and I couldn't hold it. Too big of a lot size isn't always your friend. So, that was frustrating. And then, it just shot right back up, came back down. That's normal market movement. It's that elastic effect. And then over here, so we came back up here and we had this weak bullish candle. And as we broke that low, I was convinced we were going to come and just create a little wick down at this area over here. So I was quite adamant that, these sols would materialize, but they just stopped mid-air over here. And again, that's a signal, you've got to take note of that. And then, okay, nice bullish candle. And then, off to the races. So that's I'd say that gives me a bias in a sense. And if I'm wanting to hold long-term or trying to hold longer, it's difficult for me to hold long-term, but you try. This is your security or your reason why. So, now it's gone a long way. So yeah, I'm sure we're above most of the moving averages and we're due for a good retracement. And then, daily, same story. I'll break it down a similar way. Just looking at the candles, what they're doing. So again, this sequence we've just seen over here, there it went again. Here we're in a range, and you can see this pattern. So we broke above that height. It got to this level, and it retraced. And then this over here, I'd want to avoid. This to me doesn't really make much sense. And then we have the same pattern, but the thing is, for me, it was in the range. So I was looking at it, but I wasn't too comfortable. If that bearish candle happened up here after a big move up and then we broke it, I'd have felt a bit safer. And then, this has been this week over here. So massive retracement. I actually went short here. As we broke these lows, I thought, okay, we're going to, this really coming back down. And then yeah, when that daily candle closes like that, when it's broken the lows and it's closed bullish, there's your answer. Like, there's a lot of buying pressure on that asset, and the guys that wanted the retracement to get long, they got it down over here. So I guess the next thing is, do we get a big retracement on NFP? What's the story going to be over there? Yeah.
Yeah. So, David, would you say you're more of a swing trader or a day-to-day, intraday trader?
I'd say like intra-session, sometimes I hold through from a London session into a New York session, but it's not easy because like tonight, New York, I mean, the retracement, we closed up above here on the 1 hour. And I'll just show you now. Yeah, so like we closed up above here on the 1 hour, and I thought, okay, I'm good. So I was in bars around here, and I thought we're safe now. But what happens is the 4 hours still open, and we had a bearish close. So I mean, this 4 hour reserves the right to close bearish still. It hasn't closed yet. There's no like real structure that you can work off or say, like, if this 4 hour closes like it looks now, then I'd say a safe stop loss is below here. But until then, yeah. So anyway, so the New York session got me out, but I'm trying to go longer term. I was kicking myself because I didn't hold overnight last night. But it's very difficult. You need like very high level of conviction to hold overnight. And the price must be in your direction a long way. And you've got to have a safe stop loss. You've got to take into account the spreads, as the market changes over. So it's not easy, but I am leaning towards that style. That's what I want to do, because making a trading decision is so important, and you're trying to limit that decision so you can absolutely apply your mind to the best of your ability when you make that decision. And like today, I didn't trade well today. I was getting wicked out, and like my own bias was changing. Like we have this resistance over here, or this bearish candle. We try and form support. I think, okay, at a minimum, we're going to hit that wick before we come down again. But we come down, and I think as we break these lows, I reckon, okay, now we're going to have a good retracement to this 2846 level. And that was just, like a nice level for guys to take it higher. And then you think you're safe, and then the next thing, there's this huge retracement. So, those are all, like, my story kept changing as the market session evolved. And before you know it, you've taken like 3 or 4 losses and made all these decisions. So it's far easier to make fewer decisions and let it go for a long time. Take your profit, come back in a few days' time, and then go again. That's how
I trade gold as well, personally, David. And I understand that gold is a very volatile pair, and it can get an outburst of volatility like that. Out of nowhere, gold can just move. Especially when you're holding it from session to session. You could be trading as soon as New York opens, massive spike in volatility. Sometimes it can be amazing, sometimes it can be detrimental. And ruin your day. So how would you say you maintain emotional discipline through high market volatility and sometimes deep drawdown?
Yeah, I mean, that's the tough part, some days gold behaves really well in New York, It's like rational, it respects levels, it doesn't go seeking. It doesn't have these huge retracements and then shoot up again. It's not like seeking a better price, but like today, it obviously did. So what I want to do and what I've been doing and want to do more of is just trade London, that 4 hour close. It's 8 o'clock my time. And then trade around that and hold that through to about 3 hours before New York opens. And only if I'm really convinced, and it's still difficult because it could still retrace, for gold to retrace 150 pips is nothing. So it is difficult, but you have to make it simpler for yourself. And yes, I'm the first person to listen to my own advice, but to stick to your plan and the time of day that you want to trade. The time of day is so important. The market doesn't, like, this will be bizarre behavior for London, but this is what can happen in New York. So you've got to like stick to your time and get familiar with your instrument at your time. It's not just your instrument that you trade and learning its quirks. It's about learning the quirks of your instrument at the time of day that you normally trade.
I agree with that. And it's also really important that knowing all your rules and then being able to apply it is a completely different story.
Totally. I mean, you can, like, I can't tell you how many times the rules are rational and they make sense. But to link your actions to the rules is very difficult, and requires a lot of discipline and rationalization. That a story that you tell yourself that makes it rational, why a break-even trade or a trade that's like 0.3R makes sense. Although you're not aiming for that, but if the price action you're seeing isn't in your favor, there's nothing wrong with closing early with a small profit and get away, alive.
No, of course.
There's no problem. I started working again to try and take some of the pressure off, the financial pressure off. And I was thinking
I say this all the time.
Yeah.
I say this all the time, and I make it a massive point. Having a job and a steady income, a guaranteed income each month, will make your trading go 10x. It helps so much. And I say this all the time because you see a lot of younger people who will receive their first payout and quit everything, quit their job, leave, and then everything goes downhill because they are now relying on trading. They need it to work, other than seeing it as a bonus system to receive their funds on top of their guaranteed income. Would you agree with that statement?
Listen, William, I've been trading full time. Well, I've just started working again, but I was trading full time for 2 years, and that was the hardest 2 years of my life.
I can imagine.
I won't tell you how difficult it was to just stay at home. And yes, you go to the gym and you do chores and you do things, but you sit at home and you're like, well, I lost 0.5% today. I don't feel like I was good or I did something productive. Then you look on the charts again and maybe I can make up that 0.5% or make a 0.5%.
Absolutely, yeah.
It's bad for your trading. And you forget how consuming trading is, how quickly it consumes you. It sucks you in like a black hole before you don't even know what's going on. And the next thing today, it did it to me today. I broke rules. I risked more than I wanted to. I didn't have to. I was very content with where I was with my account. I was up 3%. And then I was at a classroom the whole day today doing a course and periodically looking at my phone and I'm like, oh, it's still running. I'm going to wait for a retracement. I get a retracement. It doesn't work out. I lose. And then I'm like upset. So you've got to find a way to detach yourself from the charts. And I don't know, everyone's different, but it's your biggest power as a trader is the ability to detach. It's your only defense against the markets. It can be brutal out there, but if you can just stop and detach, you've got a huge advantage compared to other people. And it's something I'm still trying to learn and get right because I hate losing. I absolutely hate it. So I need a high winning. When I put on a trade, I want a high winning probability of that trade working out. So when it doesn't, it's something I need to contend with. Yeah.
No, I agree completely. Yeah. And these hurdles that we face, they do build you as a trader and they teach you the lessons the hard way. But they are very difficult at the time when you're facing them. Now, an issue that you see a lot and something luckily I'm completely almost immune to now is when I take a loss, it doesn't hurt anymore because for me, I feel I've become very emotionless to it because I see trading as a bonus on top of my income. And seeing it like that just changes the game. I don't rely on trading. Trading is more of a hobby than a full-time thing that I need to work out.
Looking at price action, like this is my chart. This is what I trade off of. I used to draw support and resistance lines. I don't do that anymore. So yeah, I'm just looking at the candles, and then I'll just go down into smaller time frames. So like I'll start the day off looking at the daily. If we like over here, you know, so breaking that low, like that's important information for me. So I'll look for a smaller time frame confirmation that we're going bearish, and then I'll try and enter a bearish trade. This didn't work out, you know. Gold showed what it really wants to do, and then we went bullish. And then yeah, I'll just look at I'll start off by looking at a 4-hour. You know, this little sequence over here, that I can't tell you how many times this little pattern plays out in gold, and huge trades have come from that. Big volume just dies down. You know, that exact same pattern. In this case, it broke below, which, you know, would kind of nullify it, but, you know, something like that's pretty significant. And then I'll just go down again to like a 1 hour, and I'll say, okay, we broke those highs over here. So like a stop loss down here would make sense. That would be a good trade or a good idea. Whether it works out or doesn't, you know, who knows? So what I'm saying is, I'm starting off, I'm going, like, I think it's called a top-down analysis is what the guys call it. But yeah, starting on a higher time frame and going lower and lower. So this little area over here. So this is the 1 hour. So you get a 4-hour bullish close, and then you're stuck in this range over here, and you break out the range, and you've got this candle that's clearly rejected that. And often with me, I'll be looking for like a break of an area, and then for the candle close, because that candle close gives you a lot of information. After it broke the low, it didn't continue pushing down. And then as it breaks that high, or, you know, if you want to, you're always looking for a better risk to reward, but you sacrifice your win rate. You could enter as soon as this candle closed and anticipate it to go up, but yeah, that probably won't work out. Your win rate will probably be lower. But that, you know, for me, I always try and work my way back from the stop loss. It's what I try and do. So the stop loss is the stop loss. You can't change the stop loss, you know. A valid stop loss is a valid stop loss. And if you enter up here or over here or whatever, it doesn't matter. Like where we are right now in gold, this wick over here for me is this is a good stop loss. You know, if we break that low, you know, so be it. But that's the stop loss where you need to be in for these bars. That's how I feel. And then, yeah, I'll just go lower. So 30 minutes, you know, can be more unreliable, but a lot of moves come off of 30 minutes, especially in London. And then 15 minutes, yeah, when there's high volume, you know, there's nice patterns. So like here, I entered over here as we broke above this high on the 15, and my stop loss was down here, and I'm looking to just hold this trade through tomorrow. We've just closed bullish on gold, so this 4 hours just closed bullish. So I'm just going to hold it, and then tomorrow I'll look to add to this position. Yeah. So yeah, that's my strategy. And I mean, it's just, you know, there's 4 points of information in a candle. There's the top part, the bottom, or the top and bottom wicks, you know, the body close, and where the previous candle closed, and where it opened, and then where the candle closed. So those 4 pieces of information are important, and the market does take them into account. I can guarantee you that. And then, you know, that combined with levels, time of day, and the market's fractal, you know. This candle's made up of a whole lot of structure within it, you know. Like, look at, there's the structure of that 4-hour candle. And then that's further broken down into this 30 minutes. So you try and get a flow or like a feel for where we are in the candle, how the candle could close, should close, you know, like if it closes very bullish and just shoots down, you know, like no warning, it's most likely going to retrace and break those highs eventually. So yeah, it's gold. I mean, you trade gold, and I've probably had it like, yeah, a year and a half worth of solid screen time. So you pick these things up slowly, just by looking at the price.
Well, David, thank you very much for showing us your strategy. And it's great to see that this is generating you thousands of dollars of profit. You're clearly doing something right and it's working for you. So tell me a little bit more about your risk management. What does your risk look like per trade?
Yeah, so I mean that's another thing that I need to. I can always become better at it and do more, but generally 1% is what I try and risk, but 1% was like quite a wide stop loss. So if I put on 1 to 1.5% risk, I'd want to give myself a lot of room on that trade. I don't want to have a 1% stop loss or use like, put on a huge lot size and have like a 15 pip stop loss, because that just gets the rage going for me. Like that just gets the overtrading juices flowing and all of that. So I try and give it a lot of time. I give it a lot of time. So I want my stop loss to be based off of a 1 hour or a 4 hour level, so that I know, okay, we've still got another 2 or 3 or another hour left in this candle. A lot can still happen while this candle's open, but I know this level should be respected if I'm going to be right. And if it's not, well, then I'm wrong. So, and I've given it enough time and I've given it the proper stop loss that it, that trade deserves. And yeah, it didn't work out.
So what are some of the biggest misconceptions you believe beginner traders come into trading with?
Everyone wants to trade to make money, like I believe that's the thing. It's like this, if I can trade, I'll be a billionaire in no time. You put on a few good trades, you've got the Excel spreadsheet open, you like compound interest on this thing, and you've got the countdown clock going for when you're a billionaire. That's what happens,
Looking at the Lamborghini website, yeah, we've all been there, definitely.
Yeah, like everyone's into the cars and all that, and I was too. I was like, I worked in a bank for 8 years, and I've made up enough money to give it a go full time for 2 years, probably longer. I just spent it all. Like I lost so much money trading. So it would have been.
Would you say social media has a massive impact on the misconception with the whole money thing? Because when you see it on social media, you see the cars, the girls, the watches, everything that comes with this Wi-Fi money lifestyle. Would you say that has a massive effect on a trader's psychology negatively?
Yeah, definitely. You never want to compare yourself to anyone in this game. You're racing your own race against yourself. Really, like you're not competing against anyone, and people forget how much money you actually make trading. If you, because I'm working in a business now, and I was trying to compare like what type of trade our normal business practice would be. So for interest's sake, in the day we send out a truck, and that truck's about 40,000 rand or whatever divided by 24 pounds worth of stock on it. And our gross margin is like 15%, right? So we're taking a risk. Yes, there's a higher win rate, that the load will return with the 15% markup. But you put on a 1-to-1 trade, risk to reward, that you can do that. It's totally obtainable. That's 100% markup on the goods that you've sold. And your revenue is a function of your risk that you've put on. And, with the $200,000 account, you put in, that's a lot of revenue, So that's why I say, don't discredit a trade that doesn't reach your 3R or 4R, even if it's half.
Well, personally, I trade 1-to-1s and it works very well for me. So that is a massive misconception. Now, I see it all the time. People will tell me, why do you only trade 1-to-1s? Are you a rubbish trader? No, I'm just smart. And that's the way I see it.
Definitely. Whatever works for you. There's a million ways to do it, and no one can tell you your way is wrong, or no one can say that to you. If you're making money out of the markets, good on you. You're a legend. Keep it up. Try and do it more often. But yeah, getting back to the Lambos and Instagram and all that, like I'm not into that anymore. I can imagine, or I can see how a young 20-year-old would be drawn to that and, want to pursue that. But let me tell you, getting into this game is difficult and hard and will take you to the darkest, deepest places you've ever seen in your soul. So don't. It's doable, but don't. I promise you, there's easier ways to get the Lambo. You know.
Yeah, definitely. I agree with that 100%. No,
Yeah.
the phrase I see with trading a lot is, it is the hardest way to make easy money.
Yes. Yes. And you only need to make easy money once to think it's repeatable all year round.
Yeah.
And I can tell you now, this gold market's not going to be like this forever. It's in a good trend now. It's nice. Come the summer months, that volume's going to die down. You're going to have to adjust. You know, you're trading in ranges again. It's a different story. It goes through, it's going to change. So you have to like go with it, you know, where the market is at the moment, and adapt. You know, stop trying to go for these long trades, and trust me, in the summer months, I doubt I'm going to be holding anything overnight.
The summer months is very different with the way gold moves. I can definitely agree with that. And another misconception I see a lot, and I want your opinion on this, David. A lot of beginner traders will come into the market and they'll learn a strategy, and then that is their main focus, learning when to execute this strategy. When should I execute this strategy? Now, what was a turning point for me and many people who I know is learning when not to place the trade, when to sit on your hands and step back. Would you agree with this?
Yeah, I mean, definitely. So the one pattern that I started with is it's that like small bearish, and then as it breaks the high, it goes. And that's all I looked for. I didn't care where we were. I didn't look in higher time frames. If I saw that, I traded that. And then it doesn't work out. And you're like, wow, you know, like that's exactly the setup. Why didn't it work out? And then you've got to like place it, you know, like where are we in the time of the day, you know, to start off with, you know? Volume dying down now with gold. It's just a fact. So if you see that great pattern now, it might go a little bit, but it's not going to give you a huge run. You know, where are we on the higher time frame? Is there news coming up? You know, is this Thursday night? Yeah, NFPs tomorrow. You know, what are the odds we're going to have this huge ripping trade off of that pattern? So there's all these factors that you have to build into your decision and then place it. And when they're all like lining up nicely, yes, go for the trade. Or even if they one's out of sync, you can still put on the trade, but don't expect a lot out of it. Is the other thing. You know, that's the other thing. It's like it must be the perfect trade before I trade, and that's probably a good mindset to have. But you can still make money just knowing, like, okay, realistically now, this thing shouldn't go a long way. If it does, cool, but I should at least get a 10 pip move or 15 pip move or whatever it is out of this little pattern that's playing out now. Yeah. But yeah, you have to be so cognizant of all these things that are happening. You know, like can't tell you how many weeks I've gone into where Wednesday, Thursday, even Tuesday's dead before NFP or FOMC meetings, you know? There's just nothing happening.
Yes.
And then you'll go to another month, end of last year, like I think October, around there, that huge dip before NFP on the Friday, gold just sold off. I think it was the Chinese said something, and that's...
I remember that, yep.
Yeah, like, you've got to understand, like that's... Don't expect that next NFP.
And this is funny that you mentioned that event back in October, because this was going to be my next question. Obviously, gold is a very reactive pair to fundamental information. Now, how do you use fundamental information in your trading?
Yeah, so I went through a stage where I looked at the fundamentals quite a bit. So I did a finance degree. Not that it's difficult, you know, that you need to be highly intelligent to understand fundamentals, but it doesn't really matter to me now, because you could get a number that in theory should push gold higher, or the dollar should strengthen, but the market, it doesn't really do that based on the figure that you get that's released. And I'm not going to spend time trying to build a database and, you know, see how probable it is if the data is within a variance of so much of the expectation that is going to do that. I'm not into that. I'm just going to look at the price action, and whatever the price action is telling me, that's what I'm going to believe the market sentiment is. And from my point of view, this whole gold run, it's got to do with interest rates. And if you're America, you've got a press, you're printing money all the time, and you've got to have an interest rate to keep up with that. Otherwise, it's obviously devaluing the more it gets printed. And the interest rates are now coming down in this declining cycle. So it should be worth less because you've printed all this money historically, or still, I don't know. And I don't really care, to be honest. But the interest rates are coming down. So you're sitting with all this stuff that's not growing on its own. And yes, there's a finite amount of gold. Plus the geopolitical problems and Trump and all of that, obviously weighs into it. But I think, for me, I think the big long-term fundamental bet, and if you look at the monthly and those charts, I think that's all this interest rate differential, and as it's coming down, and I think that's what's driving that long-term. That's a long, big, steady force that's moving it upwards.
I want to know a little bit more about yourself before trading. What is your story?
So I was a sportsman, played a lot of sports in junior school and in high school, but I'm a big petrol head. So I love cars and motorbikes and stuff. So yeah, I started racing motorbikes out of school.
Amazing.
When I was in uni. So yeah, I'm really grateful. I do come from quite a privileged upbringing. So, I was allowed the chance to do that. And yeah, I started doing that, and I thought I was good on a motorbike, and then started racing against other people and realized, okay, I'm not that fast. And then started doing better at the regional championships, and then went on to the nationals, and then got humbled there. And then eventually, I got to grips with it, and I finished second in the country in the 1 year. That was my peak. And the guy that beats me, or that beat me that year, is top 10 in the Dakar in the cars this year. So wow, he's really good. So I was proud of that. It was a lot of hard work, and I was really passionate about it. So I did that at a competitive level, and then finished my degree. It took me a few years to warm up, but finished my degree. And I was always interested in the markets and how they worked. Less so about economics. I remember thinking at university, I don't really care, it's nice to know that the reason why it does something is this, but the real deal's in the markets, and that's where the money is made and all of that. So I think that's where my trading, my idea of becoming a trader came from. It's like that's, you really get to express yourself and your opinion in the markets, and that's cool. You get to make these decisions. So yeah, I did that, and then couldn't find a job. I tried to get a job as a trader, but I was just hopeless and I needed to intern at banks and things if I was going to ever get that right.
Yeah.
And there was very little online at that stage as well. I signed up for one course and did it, but it didn't really make sense. So anyway, I got out of that, got into financial advising at a bank. Very difficult. It was always like, it's sales, you have to be good at sales if you're going to be a good financial advisor. Yeah. And I wasn't born with that skill necessarily. But I persisted, did it for 8 years, and partnered up with a guy that was the top producer in our company. And then, we rode around in Lambos and cars, race cars, and, I did all of that. And then got to a point where, it wasn't really what I wanted to do, and I'd saved up enough money to give trading a proper go. And I knew on the onset, trading is super hard and difficult. I was acutely aware of that, but I've done other hard things in my life, and I persisted and I've gotten it right. And I thought to myself, why shouldn't trading be like that as well? Yes, it's hard, it's got a high attrition rate, but give it a proper go. If I lie on my deathbed one day and I was like, yeah, I wish I tried trading, or I wish I gave that a go, that would be upsetting. So I needed to give it a proper go. And now I'm at the point where I've learned all of this stuff. I've got accumulated days of screen time. I'm aware. I want to get a reward now for what I know. I need to, you know what I mean? I can't, I'm going to let myself down if I don't get a reward for what I know now and all this knowledge I've accumulated.
Yeah. No, I get what you're saying. You've come too far to fail now.
Yeah, I've come too far to fail. And if I fail, it's the same mistakes that I've made 1,000 million times is what's going to cause me to fail. And, yeah, it's not impossible to get on top of it. You know, I've lost 18 kilograms in the last like 5 months. You know, I'm in the best shape of my life. I never thought I would look the way I do now. And I do. And it was, you know, discipline and just getting into a good rhythm with things and not being too hard on yourself. And, you know, here I am. So, yeah, I mean, if I can get a six pack, I can get on top of my discipline and there you go, patience. Yeah.
So first of all, David, you only ever fail when you give up. So as long as you never give up, you'll never fail. But coming back to your gym journey as such and your fitness journey, would you say all this discipline is helping with your trading as well?
Yeah, I mean, it does help. I'd say the biggest help, look, if I'm talking about the biggest help, is just getting a job. I mean, I speak to guys that trade full time. Like, that's not easy, really. So getting a job really helps to just take your mind away from it. So that was good. And yeah, discipline, it does help. You know, like today, I really, really didn't want to go to the gym. I went, but my trading wasn't very disciplined today. So I wouldn't say, you know, there's a direct correlation, but I'm bitterly disappointed with how I interacted with the market today. And I'm going to make sure now that I'm going to be more, my next trade's going to be a very like disciplined, you know, low risk, whatever happens, happens. Take some time, think about the long term again, and then come back into it. But yeah, you've got to strain your mind, you know, you've got to like keep your mind, you've got to challenge yourself because the trading is going to challenge yourself every day. And if you're not used to challenging your mind, then the trading is just going to dominate you. It's just going to overwhelm you. So you have to get used to that tussle. And going to the gym is that same tussle, you know, it's just a lot easier to go to the gym than it is to trade.
No, I completely agree. Yeah, definitely keeping fit and doing something more or less, not that you hate, because usually when you start going to the gym, you actually start to enjoy it. But it is definitely, so I go to the gym personally, and there's days I do not want to go, but it's important that you get yourself there, just show up. And even if it's not your best workout, it's better than not going at all. And it's the same thing with training. You carry these things over and you learn. It definitely helps you improve with your discipline, I would say. I agree with that.
Can I tell you a really easy negative cycle to get into? You at the charts, you take a loss, okay, you wait a bit, you go put on another trade, you take another loss. The next thing, it's like getting towards lunchtime or whatever, and you're like, okay, I'm just going to keep looking at the charts now, maybe something happens and I'm going to go into New York, but you've missed your gym because you'll normally gym around lunchtime. The end of the day comes, you in max drawdown, and you haven't gone to the gym. And then you tell me what your self-esteem does. Like, you got to be
definitely.
Yeah, you have to create it for yourself, even if they're outside of trading.
Absolutely, yeah. It's super important because people don't realize as soon as your emotional state declines and you may feel fine, but you're not. And that really affects your trading. And people don't understand how much it affects your trading. You become really emotional. And I remember when I first started, I used to become really angry and annoyed and just, it was not good at all. And you make stupid decisions that you would never make in a calm state. So yeah, I completely agree with that. That is so true. So what would you say are some of the hardest struggles you faced along the way?
Well, I'm in one quite now, basically. So I've created a big financial burden for myself trading. I just had this belief that I'm going to get it right. And I just dug myself deeper. Eventually started putting money directly into brokers. So, you know, depositing money there. And then, like in a week, make $30,000 on $10,000 and thinking, again, you know, spreadsheets out, it's Lambo time. And then the next thing you know, that money's gone. And it's devastating. You know, it puts a strain. I've got my second child's due in the next 2 weeks. And I wasn't fully present for the birth of my first daughter. I was, you know, I'm trading now. This is super important. This is all that matters. I'm going to do this all the time. So I forgot what we were talking about, but
So what's the hardest struggle you faced?
Yeah, so I mean that's hard, you know. Trump. So Tuesday you get they do the elections. Wednesday, was it Wednesday or yeah, it was Tuesday that they did the election. That Wednesday, London and it started moving. So we had this huge sell-off on gold, London session, and then a massive retracement, you know, on the 1 hour, and then this quite a substantial wick on the 1 hour. So I waited, I bought my time. I was funded at the time, $200,000. As the price retraced to the top of that bullish wick on the 1 hour, I entered a sell, 15 lots. Price probably moved 6 pips past that wick and started going down. Okay, so I think, yes, I have to hold this trade now. I have to hold this trade. It goes down probably 40, 50 pips, comes back another 25. I'm like, it's not working out. I get out. Falls down, get back in. Comes back up. I'll try my best to hold it. Eventually, I'm up like probably $6,000, 3%, and get a nice pattern close around New York time. I'm like, I could just put my stop loss and break even here, but, you know, I'm up, 90,000 Rand or whatever it is. Like, it's good. Just be happy with that. And then it just teleported down, like instantly, no wick up, nothing, just dropped. And I just remember looking at the charts being like, okay, that's 750,000 Rand. Okay, that's R1 million. And it was just devastating, And by the time I finally built up the courage to go again, no, that's the wrong phrase. By the time I looked at the chart and I created so much pain for myself, so much FOMO that I closed that trade, that I eventually got in, took a small loss, and I promise you, by the end of that New York session, I'd blown that account and I was livid. So that just shows you how quickly it can change and flip on you if you're not in a stable state of mind. And by that time, I'd been behind the computer the whole day, So there's no way that I was thinking rationally. So that was a lot of pain. That was recent pain that I experienced.
No, I'd definitely say it's really important to make sure you step away from the screens, and setting alerts is so important, because when you sit in front of the screen for hours and hours on end, you can sometimes feel like if you can't find a trade or you lose a trade, you then get into the mindset of, well, I've been here all day, so I have to win. I am going to get a trade, or I am going to get a win, or I'm going to make this loss back. Yeah. And sometimes that's the worst thing. It is your own poison, and it starts destroying your trading.
Yeah, definitely. You start manufacturing things, you start being creative, you start trading when there's no volume. You just do all these weird things, instead of sticking to a time, familiarizing yourself with that time and doing one trade a day. And even on the 4 hour, I think the biggest cure for overtrading and all of that is just trade off 4 hour candles or high time frame candles, because they're going to limit you. You're going to have a stop loss that's below, the bottom wick of a 4 hour candle, and that's your stop loss, and you're going to leave it there and then see where it goes. So just do what you're doing and move it to a higher time frame and give it some more time, and you can make a hell of a lot of money trading the higher time frames, if not more.
Yeah.
Or the scalping versus swing trading debate, it's irrelevant. Who cares? You can make a lot of money either way. It's just going to take so much mental capacity from you to scalp. It's really tough.
I feel like your overall trading experience really matures when you step to them higher time frames. I was there as well, trading the 1 minute, the 5 minute. And then as soon as I stepped to something more like that, 30 minutes to the hour, changed everything. It really did.
Yeah, definitely. And look, there's guys out there, if you look at gold now, guaranteed there's guys that have been holding this for months,
Yeah.
And they've got their conviction. They're not worried about a bit of turbulence on a weekly candlestick, and they must be up, so much money now. So I think it does attest your conviction, and, to disregard candles that are closing against you, knowing that, okay, look, if it does go beyond this point, I'm out, that I'm not gonna be scared by a bearish 30-minute candle if I'm in a bar. That shows a lot of maturity and confidence, and you need to know what you're on about to handle that.
Okay, well, David, this has been an absolutely amazing interview so far, but I've got to ask you, How has your experience been with Alpha Capital been so far?
Yeah, I've had a good experience with Alpha Capital. I've been with you guys or had partnered with you for a while through the various challenges. Things I like is the feedback you get when you email. So I always get a quick email response. If I have a question, it always goes answered. And that means a lot, you know? So sometimes I'll seek clarification or something, or I have a query about something. I send an email and yeah, I get a direct response, which I really appreciate.
Yeah.
The online platform works well, you know, to track your trades and the minimum time hold that you have, to keep track of that. And yes, when you buy accounts, it's instant, you know, you get the account immediately, which is nice. Yeah, I mean, the payouts process that I went through now works fine with Payouts. That whole system works really well. And yeah, I just hope you guys stay around for a long time and keep doing the good work.
Oh, we are, man. We're here for the long run. I'll tell you, you've got some big things planned.
Yeah, the main thing in this is just sustainability, you know, like my mindset now is really long term, and you want to partner with someone that is going to be here in years to come. And the last thing you want is to be trading an account and then worry if the firm's going to go bust or not. That like just adds that's the fourth dimension to your psychology. No one should ever have to worry about.
No, but yeah, that's definitely a worry you should never even have in the back of your mind, because that's got nothing to do with your trading. I can assure you, we're here for the long term. We've got some very big plans coming up in the near future.
Yeah, and I'm excited to work with you guys and to hopefully scale and keep things going. Yeah, like I've got a job now. I've got all the time in the world. Whether my trading really takes off in 2 years from now, or 3 months or 5 years, it doesn't. It'll happen when it happens. And yeah, I'm keen to partner up and to.
Amazing. And we can't wait to see it too. So what do you think to the overall Alpha Capital community?
To be honest, I haven't spent much time on Discord. I don't really know who the other Alpha Capital traders are, or what styles they trade or anything like that. I'm just super focused on my own trading, and I think I follow one trader on Instagram. I really don't care what anyone else is doing. Doesn't bother me, doesn't affect me. And I hate comparing myself to other people. When I open up the email on the top performers for the month, I just like immediately delete it. I hate seeing what other people have learned. I hate the comparison thing. It really just messes with my mind a bit, and makes you want to push a little bit harder. And
of course,
yeah, but yeah, Alpha Capital is good. I mean, you've got affiliates that are that you've got some good big names in the industry that are affiliated with you, and that says a lot about you. So, and you've won an award on Prop Match, I see, recently. So,
yes, we have. Yeah. Now, so why did you actually choose Alpha Capital Group? How did you come across us?
I think I was in the process. I was buying prop accounts, and it was, I think, Waka is his name, or the Titans of Tomorrow. He spoke about it, and I was like, okay, well, if he's speaking about it, it's worth a try. And yeah, I think I got funded pretty early on. I think like my first account that I bought, I might have got funded, and then got a payout, and it was like super easy, super simple. No BS, and I was like, okay, I'm here, I'm not gonna worry. Also, the pricing's good. I think it's very competitive. And at that stage, I was having issues with another prop firm that I was using regarding the pricing, the price feed. When you get a different price on your MetaTrader to your Oanda trading view, it's not a good feeling. So
no.
So yeah, I mean, all of that. It's just You buy what you see is basically what I'm saying.
Yeah.
And that's what all you want as a trader. I mean, the concept is unbelievable, the way that, to get funded with the amount of money you put in and get 80% of the payouts. Like
Yeah.
truly unbelievable. So, or just if a prop firm brings their end of the deal, then that's amazing. They're doing a great thing.
So what is one thing you would like to see added to the Alpha Capital Group platform?
What I would like, if I'm honest, so there's obviously a style of trading, that's not conducive to long-term profitability. And, you can look at certain metrics like the risk you're putting on and, all of that. But I'd like almost a gauge, like just something that like puts all the data together and says like, you're in a dangerous level here.
I get what you mean. Yeah. What does look like long term? Yes. No, I get that is a good idea. I see that. Yeah.
Even if it takes the variance in your equity curve, and if there's a big variance, it's like, watch out, like you're having big swings, like reduce lots of.
No, that's a really good idea. Yeah.
Yeah, just like an overall graphic like that would be nice. And, all I can ask for as well is like, it's nice that you guys set out the rules. I really appreciate that, regarding news trading and, the things that you want to, that you don't want to see. And that's completely, I agree with that 100%. That's your prerogative. That's part of your risk management. If you're going to be a successful prop firm going into the future, you need to have unbelievable risk management. I don't even want to know how difficult it is to get it right. And just to communicate those rules to the traders is fantastic, I hate it when guys are ambiguous and they have these like open-ended statements, and you're like, well, do I fall into that or don't I fall into that? Like, I don't know, and then you get funded and then there's a few questions. It's like, just be straight up, even if there's another 20 rules that you add, have them there, and then everyone knows what they are, and then we can go about it. If you violate them, you knew it was a problem, you violated it, sorry. So I like that transparency from Alpha Capital, and yeah, I've got to tailor my trading to fit in with those rules, and that's just part of the deal, Otherwise, we'll be leveraging, we'll be dropping 100 lots on a $50,000 account, and like bracket trading, and it'll just be a dog show.
No, absolutely. And look, people try it. I'll definitely say that. So what does the next 12 months look like for David? What are your goals?
Yeah, so right now I want to just slow down. So like I said, I'm never a good day today. So I really just want to tone things down a bit, focus on work again. Ideally, just wait for NFP to be over, come back on Monday. We'll get a lot of information in the charts based off of NFP. And then start going again, low risk, keep moving. And my goal is just to get as much funding as I can, basically. So
brilliant.
Get a payout, buy an account, get a payout, buy an account. Just grow that as big as possible. And
awesome.
Just keep trading. But like I said, it's not an easy game. You get sucked in and spat out so quickly, and you've just got to know, just keep going slowly and allowing myself the time to mature. And trust me, I'm the first person to say I don't have it all figured out. Really, I don't. I think it takes a long time in this game to really get on top of it. You must have such a deep self-awareness to know when you're heading in a bad direction, and coupled with that self-awareness, the ability to act on it, which is not ingrained in knowing something's wrong to begin with. That's a separate skill that you need to learn.
Yeah.
So those are all things I'm just trying to focus on and get better at, and get a reward for the knowledge I've attained and the pain I've gone through, and the ideas that I have. And I think sometimes I feel like I've got great intuition, and then you're wrong, and then you're like, oh, okay, you got to take so anyway, I just want to grow, scale, take it slow, still be trading 5 years from now. You know, that's my goal.
Well, there's some amazing goals, David. And overall, this interview has been amazing. You've given some amazing advice to any new beginners starting out. But before I let you go, what is 3 top tips you would give a beginner trader starting out today?
Trade the higher time frame. Trade 1 hour, 4 hour. Only do 2 trades a day. You know.
Spot on.
And if you take 10 years to learn this skill, it'll be worth it.
Well, I couldn't agree more, David. They are some amazing tips. So thank you for joining me today. It's been an absolute pleasure to talk to you. I wish you all the best with your future in this journey, and I believe that you can get to the goals you want to get to. So thanks for joining me today, David. It's been amazing, and I'll see you next time.
Thanks, William.